On April 9th, Trump imposed an additional 50% tariff on China, a total of 104% since the beginning of Trump's second term. A few hours after Trump's new tariff announcement, China retaliated with also an additional 50% tariff on U.S. goods effective April 10th, rising the total additional tariff to 84% on U.S. imports during Trump's second term. China has vowed to fight to the end unless Trump softens or concedes. This suggests that China is prepared for a full economic decoupling from the US. China's top geopolitical goal is the unification with Taiwan. The biggest obstacle of this goal also happens to be the United States. Kentucky Senator and Republican Rand Paul criticized Trump's tariff policy. He said that full U.S. China decoupling would trigger a Chinese invasion of Taiwan.
But I can tell you this, if people care about the freedom of those people in Taiwan, they shouldn't want to cut off all trade with China. Okay. At the moment there is no trade with China, that is the moment that Taiwan will be taken by force.
Senator,
the main thing that keeps Taiwan as free is trade.
Beyond its geopolitical goal, China is also seeking tie with European Union, who is also hit by Trump's tariff. On Tuesday, China's number 2 official Li Qiang spoke with European Commission President von der Leyen. Li said China has ample policy to offset external shocks and remain optimistic about its 2025 growth. He emphasized that protectionism leads nowhere. Openness and cooperation are the right path. Li urged the European Union to enhance communication, expand mutual market access, and pursue a new round of high-level strategic and trade dialogue. The stock market bloodbath has caused significant pain for the Wall Street. Even the perma bull Tom Lee has shifted to a more pessimistic market outlook. Tom Lee recently made a wrong call. It's probably one of the worst calls in his career. Before April 2nd, the Liberation Day, Tom Lee predicted that the U.S. stock market would rebound, and based on the sell the rumor by the news logic, instead, the market lost $5 trillion in value in 2 days after April 2nd. According to Tom Lee's latest interview, he has turned pessimistic. He blamed the market shock on White House breaking the covenant of capitalism, which is a stable and predictable regulatory environment. Sudden global tariffs are seen as unpredictable and destabilizing. Tom Lee believes it will take time for the market to regain trust, pretty much saying the market outlook is treacherous. It will take a bit to actually recover from this. So I think it will be very funny if the market rebounds soon, because that would make Tom Lee make another wrong call twice in a row. But I don't think we should blame him, because this is his job. He's a professional TV personnel. He needs to keep on making predictions to stay relevant. And of course, the more predictions you make, the more likely you're going to get it wrong. The stock market crash has also hurt Trump's capitalist allies and sparked tension within the Republican Party. Infighting has emerged between Trump's closest advisors, Elon Musk and Peter Navarro. Elon Musk has publicly opposed Trump's new tariff and has made attempts to appeal to Trump to reverse the policy. But on the other hand, Peter Navarro, who is also a key Trump advisor who advocated for a tariff, criticized Elon Musk, calling him a car assembler, not a car manufacturer. Navarro said in many cases, if you go to his Texas plant, a good part of the battery comes from Japan and China. The electronics are coming from Taiwan. So Elon Musk responded by calling Navarro a moron. So I think what Navarro is actually saying, he's actually pointing out a conflict of interest that Elon Musk has as a businessman and a politician at the same time. He relies on imports from foreign countries, so tariff would hurt his business directly. Navarro is implying that Elon Musk isn't truly aligned with the Made in America or the MAGA value that Donald Trump have. Speaking of MAGA, Ray Dalio, the founder of the largest hedge fund Bridgewater in the world, he thinks that the plan to replace Chinese imports with US-based manufacturing faces major challenges. In a recent interview, he highlighted a structural issue with US labor force. He noted that 60% of Americans have a reading level below 6th grade, limiting productivity.
60% of the population has below a 6th grade reading level. It's tough to be productive. And so from a practical point of view, that manufacturing is very difficult under this sort of circumstances to create within the United States.
So he is implying that the US population is generally less educated than China's. It's hard to fulfill manufacturing needs. So I think another challenge he didn't mention is wage expectation. Most Americans aren't willing to work for low wages. So for high-end manufacturing, there may not be enough highly educated workers in the US. For low-end manufacturing, American people are not willing to take low-wage jobs. Setting up US-based manufacturing will take years. The immediate concern is the economic impact of Trump's aggressive tariff policy. The biggest current risk is stagflation, a scenario where the growth is slow, combined with high inflation. This situation would corner Federal Reserve, limiting its ability to respond with monetary policy. With high inflation, Federal Reserve may have very little room to cut rates or stimulate growth effectively. So how will Federal Reserve navigate this? To understand this, we need to first assess the situation. I think the tariff-driven inflation is man-made and is on the supply side, not on the demand side. Fed's mean tool, which is interest rate hikes to deal with inflation, works best on demand-side inflation. Hiking rate on supply-side inflation risks stagflation even more, as it slows down growth even further. So Fed will face a tough choice under his current dual mandate, which is price stability and maximum employment. So I think the possible Fed responses would be: number one, tolerate a higher inflation temporarily to support growth. Number two, rise inflation target. Maybe raise it from 2% to 3% for a little bit. But this one is not too important. They can keep it as is because eventually the man-made inflation will settle. Number three, reframe inflation as transitory, like what he did during the COVID era. Number four, temporarily change the dual mandate to a single mandate, which is prioritize jobs over price stability, as again, inflation is externally driven and could possibly be a temporary thing, as it's a supply side shock. Thank you very much. Please like and subscribe.